Hello everyone, this is Vivek Anand, Assistant Professor, Department of Management, Tirthankar Mahavir University. Now we are going to discuss today an important aspect of auditing, that is tax audit. And to maintain the better understanding of this topic, we have to distribute it in various heads like meaning of tax audit, objectives of tax audit, applicability of the tax audit means on what type of SSC tax audit is applicable, then types of tax audit, then statutory audit and tax audit, some difference and some relations between the both. Then we will discuss the tax audit report, that is the end product of tax audit process. We also discuss about the various types of SSC who is entitled to submit their income tax return by a prescribed date from the Income Tax Act 1961. And if any SSC is failed to conduct tax audit, if he required, then what will be the penalties are there? So we will discuss all these subtopics under the main topic, tax audit. So let me start from the meaning of tax audit. Tax audit, like the name itself suggests, tax audit is an examination or review of accounts of any business or profession carried out by SSC or taxpayer from an income tax viewpoint. Means this audit having a main aim to check the income tax on the income of the particular SSC or taxpayer. So tax audit is the process of verification and inspection of the accounts of a taxpayer to confirm their adherence or their following the provisions of income tax law. Tax audit helps in review of connections related to income, expenses, deductions, and tax of the organization. It makes easy the process of filing income tax return for taxation purpose. Tax audit is done by a chartered accountant and the audit report reported to the income tax department in a prescribed format. There are various limits to submit the income tax report. Tax audit is performed from an income tax viewpoint. The purpose of tax audit is to check whether the calculation of income tax liability is correct and according to the provisions of income tax law. The tax audit certification from SCA allow the income tax department to place confidence in the information submitted by the SSC in his income tax return. So in tax audit, simply the audit is required as per section 44 capital AB of the Income Tax Act 1961, and this is called as tax audit. So here section 44 AB empowered by the Income Tax Act 1961 for tax audit. The outcome of the tax audit is an audit report. This report is drawn by CA or tax auditor, where he or she gives his findings and observations about compliance of the person under audit. So basically tax audit provides that is calculation of tax in the books of accounts of the taxpayer is correct or not. Is there any income that should be included in the income, expenses that may be permitted or not, deductions, rebates, reliefs, all these are calculated or inspected or examined by the auditor to find out the exact tax liability of the SSC. And on the basis of tax audit, the SSC can file his income tax return in a proper or easy. So tax audit is all about to check the income, expenses, deductions, reliefs, rebates related to the particular taxpayer and ascertain the proper tax liability. Now, what is the objectives of tax audit? Let me discuss. The first objective is verification of compliance. Verification of compliance, the primary objective of tax audit. In tax audit, verification of compliance of business and professionals with the provisions of income tax will be checked. This involves a meticulous examination of the books of accounts of a taxpayer concerning to financial statements and other relevant records to ensure adherence of tax laws, rules, and regulations. Whether the tax laws, rules, and regulations are followed by the SSC or not. The second is accuracy of financial statement. Actually, each type of audit provide that whether the books of accounts are providing true and fair view or not. So in financial accuracy, an auditor ensure the reliability of financial statistics in a crucial aspect of tax audit. The audit process includes a thorough evaluation of the financial statement to ensure that they are correctly representing and fairly showing the financial state of the business or profession. This rigorous scrutiny improves the reliability of financial reporting and increase the overall credibility of financial data provided to interested parties such as government, investors, and lenders. The tax audit provides credibility to the financial information provided to the stakeholder. So, audited books of accounts concerning to tax aim provide a reliability towards the users of financial statement. Then, facilitating effective tax administration. Tax audits aim to facilitate to help tax administration by providing tax authorities with accurate and reliable information. This enables tax authorities to assess and collect the appropriate taxes owed by business and professionals. The information obtained through audit also assist in formulating the implementing tax policies that are responsive to the evolving economic landscape. And if books of account are audited, then tax authorities suppose that data may be reliable up to an extent. Because all these books of accounts of profession or business or a taxpayer has been audited by a qualified chartered accountant. So there may be less degree of risk. Next is risk mitigation for taxpayers. While tax audits are often viewed as a compliance mechanism, they also serve as a risk mitigation tool for taxpayers. Identifying and rectifying potential issues during the audit assignment by the auditor can prevent future disputes with tax authorities, reducing the likelihood of penalties, fines, and legal complications also. Tax audit have a protective approach that helps business and professionals maintain financial stability and compliance. So if tax audit is there, then it may be said that after the audit, if some type of checking again, then the income tax authorities find that the risk chances is less due to audit has been conducted earlier for the purpose of tax calculation. So there is a benefit for identifying and mitigation of risk up to an extent. And the last is easy filing of ITR. ITR means income tax return. To make easier for the tax authorities to verify the correctness of the income tax return filing done by taxpayers, the calculation and verification of total income, deductions, claims, exemptions, rebates, reliefs also become easier. So somewhere tax audit provide a easy path for filing of income tax return, because after the audit, after the tax audit, reliable and accurate data is there. So these are the basic objectives of a tax audit. Now we discuss about applicability of tax audit. Actually, this is the gray area under the head tax audit. To determine whether tax audit is applicable to an SSA, various parameters should be evaluated, such as whether the SSC has opted for presumptive taxation scheme, the turnover of the SSC, and question of whether the SSC's total income exceeds the basic exemption limit. So to analyze all these parameters, we will discuss about a table in which there are various categories and applicability of tax audit upon there. So let me start the category of taxpayer and is tax audit necessary or not. Point number 1, the SSC is carrying on a business but has not opted for presumptive income scheme under the Act. Presumptive income scheme means the taxpayer is not liable to calculate his income, expenses, relief, deductions, etc. By the Income Tax Act under Section 44 AD, presumptive taxation scheme introduced to provide the relief to small businessmen or small professionals. So a businessman simply calculate his income, or on the basis of a presumptive tax rate, he submit the tax. So first category is the SSC is carrying on a business but has not opted for presumptive income scheme under Act. Then tax is calculated under the process of tax audit. Means tax audit is necessary if the total sales turnover, gross receipt. Important area, total sales, turnover or gross receipt exceed the limit of 1 crore rupees. Means a taxpayer is liable to get audited his books of account if he is carrying a business and did not opt for the presumptive income scheme under the Income Tax Act 1961, Section 44 AD, and if his total sales, turnover, or gross receipt exceeds 1 crore rupees. So, for this type of SSC, tax audit is necessary. Now, second category, the SSC is carrying on a business and has opted for the presumptive taxation scheme under Section 44AE, 44BB, or 44BBB. For this type of SSC, tax audit is necessary if SSC claims profit which are lower than the prescribed limit under the presumptive taxation scheme. Means SSC carrying a business and he claims that presumptive taxation scheme under Section 44AE, 44BB, or 44BBB provide that the actual profit that is lower than the prescribed limit under this scheme, then it is necessary for this type of SSC that he should get his books of accounts audited. So, in first point, the SSC not opted for presumptive income. In second point, the SSC opted for the presumptive taxation scheme, but in second case, the SSC claims that profit which are lower than the prescribed limit provided under the presumptive taxation scheme. So, if he claims so that profit is lower than the limit provided in presumptive taxation scheme, then tax audit is necessary for this SSC. Third point, third category, the SSC is carrying on a business and has opted for the presumptive taxation scheme under Section 44 AD. Now, concerning tax audit is necessary if SSC claims profit which are lower than the prescribed limit of presumptive taxation scheme and has a total income which is in excess of the basic exemption limit. Further, tax audit is necessary if the sales, turnover, or gross receipt of the business is greater than 2 crore. So, in these three categories, we categorize the taxpayer of a business with relation to presumptive taxation scheme. Fourth category, the SEC is carrying on a business, but the SEC not eligible to claim presumptive taxation scheme since the SSC has opted out of the presumptive taxation scheme during the 5-year lock-in period commencing from the year in which the scheme was initially opted. Here, inclusion of lock-in period or option to get out from the presumptive taxation scheme is here. In this case, tax audit is necessary when if the SSC has a total income which is in excess of the basic exemption limit. Here we concerning about the excess income over the basic exemption limit. Now, fifth category, the SSC is carrying on a profession. The SSC is carrying on a profession but has not opted for the presumptive income scheme. In this case, the tax audit is necessary if total gross receipt of the profession exceeds 50 lakhs, exceeds 50 lakh rupees. Now, sixth point, the SSC is carrying on a profession and has opted for the presumptive taxation scheme. Here the SSC is opting the scheme. Tax audit is necessary with the condition that if the SSC claims profit which are lower than the prescribed limit under the presumptive taxation scheme and has a total income which is in excess of the basic exemption limit. Claiming profit which are lower than the prescribed limit and has a total income which is in excess of the basic exemption limit. Next category is 7. Point number 7. The SSC has incurred a loss. We are just shifting from the income portion towards the loss. Yes. The SSC has incurred a loss from business and the SSC wishes to carry forward the loss to future assessment year also. The SSC has not opted for any presumptive scheme. Means the SSC having loss want to carry his loss to the future assessment year and he is in the category who did not opt for any presumptive scheme. Then tax audit is necessary. If the total sales, turnover, gross receipt exceeds 1 crore rupee and the taxable income of the SSC exceeds the basic exemption limit. Here we include both total sales, turnover, gross receipt and taxable income of the SSC. Total sales, turnover, gross receipt are compared with 1 crore rupees and taxable income with basic exemption limit. And the last category, that is point number 8. The SSC has incurred a loss from business and the SSC wishes to carry forward the loss to future assessment years. However, the SSC has opted for a presumptive scheme under the Act under section 44AD, 44ADA or 44AE. In point number 7, SSC did not opt for the presumptive scheme. In point number 8, SSC opt for the presumptive scheme. So in case of 8 point, in case of 8th category, the tax audit is necessary if the total income of the SSC exceeds the basic exemption limit. So all these category of taxpayer and applicability of compulsory tax audit is categorized in 8th section. 1, 2, 3, 4, 5, 6, 7, 8. And each category of taxpayer is regarding the business, profession and business with loss. First 4 categories: carrying on business, carrying on business, carrying on business, carrying on business. Next 4 category 5 and 6, profession, profession. And the category number 7 and 8 is business having loss, SSC having loss. So we just finding that in which category of taxpayer tax audit is necessary. Okay. Now let me discuss about types of audit, types of tax audit. There are 3 main category of tax audit. First is field audit, then office audit, and the third one is correspondence audit. Field audit. Field audit is conducted at the taxpayer's place of business or home, means where the SSC is carrying his business. Prime facie, it will conducted on the office where the books of accounts are kept, simply registered office. On the off chance that it is to be conducted at SSC's representative place of work, then SSC will need to provide the necessary documents to them. Usually, the IRS conducts field audit when they have questions regarding more than one or two deductions, such as deductions regarding the profession business. So, in such type of audit, typically very thorough and may even cover all the item in a tax return exam. So, field audit, just an audit that is done by IRS, Internal Revenue Service, at the place of the SSC, at the business place of the SSC. And the IRS can demand various types of proofs or statements or evidences in concerning to the required by audit. Second is office audit. This is conducted at an IRS office, and you are supposed to visit the office with the necessary document into. Typically, a letter or email was sent from the side of IRS to the SSC, stating that the documents should be carried by SSC for audit purpose at IRS office. One must note that individual or SSC can bring their lawyers to the office to represent them. Means there is no foundation that only SSC have to come to represent the papers, documents for audit purpose. He is authorized to seek the help of his lawyer, and lawyer can represent the SSC in the office of IRS. Then correspondence of audit. In this type of audit, the IRS sends you a letter or email requesting documents that you will provide, that SSC will provide clarity, missing information regarding his tax returns. Email audit does not require a taxpayer to meet the auditor in person. Means in correspondence audit, it is not the foundation that taxpayer have to meet with the auditor. Taxpayers send the required documents to IRS via letter or email. Usually submitting adequate proof will conclude the investigation in taxpayer's favor in case of correspondence audit. Here examination and verification is not related to the very material information, but clarification should be required by the IRS. So these type of audit, as a summary, you can say that field audit is conducted by the IRS, simply income tax department, at the place of taxpayer's business place. In case of office audit, taxpayer or SSC went to the IRS office carrying the relevant document for audit purpose. In third, correspondence audit. In this, information for audit and required document was sent by the IRS or income tax department to the SSC, and SSC is liable to present all the document by letter or email. And in case of correspondence audit, usually submitting adequate proof will conclude the investigation in the taxpayer's favor. In case of office audit, individual or taxpayer or SSC can bring their lawyers to the office to represent them. So these are the types of tax audit: field audit, office audit, correspondence audit. Let me discuss about some relation between the statutory audit and tax audit. Under various legislations, including the Companies Act and Societies Registration Act, the entity may face the requirement to undergo an audit of books of accounts. Means audit is there. In case the taxpayers is already facing a statutory obligation to get the accounts audited under a law other than Income Tax Act, then in such cases there is no need to once again undergo another audit to satisfy the requirement for audit under the Income Tax Act. Here it shall be considered sufficient if the taxpayer's books of accounts are audited under the other law mandating audit. However, the audit under the other law should be completed before the due date of filing the return. So, statutory audit and tax audit is related in that sense that if a statutory audit has been conducted on the books of accounts of SSC or taxpayer and it has been completed before the due date of filing the return, then there is no requirement for the separate tax audit. The taxpayer can furnish a prescribed audit report under income tax law stating that since the account have been already audited in accordance with the requirement of any other law applicable to the business or profession, then an audit under the Income Tax Act is not necessary. So, statutory audit that has been already conducted on the SSC prevent from the repeating tax audit. Yes, SSC can furnish the information to the department that a statutory audit has been already conducted and the report is here. Let me relate by the category of taxpayer. Suppose in the second category, there is a requirement of necessary tax audit. But if the SSC already undergo with an audit required by the any other law applicable to this particular business, then he may exempt from the tax audit. For this purpose, the taxpayer or SSC can furnish a prescribed audit report under income tax law stating that since the accounts have been audited already in accordance with the requirement of another law, so an audit under the Income Tax Act is not necessary. Okay. Now we discuss about the end product of the tax audit, that is tax audit report. The report that shows the result of the entire auditing procedure is called an audit report. The audit report comes under Rule 6G of Income Tax Rules. The tax report is prepared and electronically filed by a chartered accountant or tax auditor. The tax auditor furnishes the audit report according to the particulars in Form 3CD. The Form 3CD is a prescribed format for the SSC to furnish the tax audit report. The tax auditor shall furnish the report in a proper manner either in Form 3CA or in Form 3CB. The Form 3CA and 3CB as applicable. Form 3CA. This form is prepared when it is mandatory to get books of accounts audited under any other law for an SSE carrying on a business or profession. An SSE who is carrying a business or a profession and get his books of accounts audited under any other law, then the auditor is required to furnish the audit report in Form 3CA. Now Form 3CB. This form is prepared when getting books of accounts audited under any other law for SSE carrying on business or professional is optional. Here option is there. So in the first case regarding the Form 3CA, mandatory audit of books of accounts, and in case of Form 3CB, option is there. There is here compulsion is not required, but in case of 3CA, mandatory. Now Form 3CE. This form is furnished when non-residents and foreign companies receives royalties or fees for technical services from the government or an Indian concern. So these three forms are main forms in which an tax auditor is required to furnish the audit report. When the audit under any law is mandatory, then Form 3CA. When the audit under any law is optional, then 3CB form. And for the non-resident and foreign companies receives royalty or fees for technical services from the government or an Indian concern, then the auditor is required to submit audit report in prescribed Form 3CE. In case of either of the above mentioned audit reports, the tax auditor must furnish the prescribed particulars in Form 3CD, which forms part of the audit report. Actually, Form 3CD is a part of audit report. So 3CA, 3CB, 3C is the specific forms by the tax auditor to furnish the audit report, and Form 3CD means in either of the three cases audit reports, the tax auditor must furnish the prescribed particulars in form number 3CD as a part of audit report. Let me discuss some due dates of filing tax audit report. The due date of filing the report depends on the category of taxpayer as like as necessity of tax audit. The taxpayer must file the report on or before the due date of filing the income tax return. Sometimes the due date will extended. Sometimes the due date are extended by the income tax authority, but until extension provided publicly by the income tax department, the SSE is required to submit his audit report on or before the due date. On or before the due date. Let me discuss some due dates for the tax audit report. Category of taxpayer. First is individual, Hindu undivided family, AOP association of persons, BOI body of individuals. Books of accounts not required to be audited means in the first category of taxpayer, whether he is individual, HUF, AOP, BOI, in all these type of taxpayer, if books of accounts is not required to get audited, then the due date for the filing of audit report is 31st July 2024. All these last date or concerning date are for the assessment year 2024-25 or for financial year 2023 and 24. Okay, all these are date standardized by the income tax department until they are extended by the income tax department. So, first category of taxpayer should submit their audit report latest by 31st July 2024. All these dates are related to the assessment year 2024-25 or financial year 2023-24. Second category, business. A business where the audit is required. Then the last date is 31st October 2024. Means in case of a business where audit is required, the auditor should submit the tax audit report latest by the 31st October 2024. Third category, businesses requiring transfer pricing reports in case of international specified domestic transactions. Then the last date to file the tax audit report is 30th November 2024. In second category of taxpayer and third category of taxpayer, the difference is requiring transfer pricing report. If the business required transfer pricing report, then the last date is 30th November, and if only audit is required by the business, then the last date is 31st October. Fourth category, for revised return. For revised return, that is 31st December 2024. What is revised return? Actually, section 139 subsection 5 of Income Tax Act 1961 provides the help to the SSC to file the revised return if he finds that a mistake, a omission has been detected by him in the original return. So, if an SSC find that he have omitted, he has been omitted some information, committed some mistake, or missing some information to provide the audit in audit report, then he allowed to submit the corrected return or revised return before 31st December 2024. Next category, for belated return or late return. In this case, belated returns should also be submitted by the 31st December 2024. And the last is updated return. This is 31st March 2027. Actually, this duration starts from the 2 years at the end of the relevant assessment year. Relevant assessment year means for financial year 2023-24, relevant assessment year is 2024-25. So when the 1st March of 25 end, from this date 2 years, that is up to 31st March 2007. So these are the, so as the tax audit completed, tax audit report filed with ITR, and these are the various categories of taxpayers, and these are the last date to file ITR regarding income tax for respective categories of taxpayer. and all these dates are based on financial year 2023-24, that is assessment year 2024-25. Let me discuss. If the SSC did not conducted tax audit, then what is the consequences, or is there any penalty? Yes, let me discuss. A person covered by section 44 AB means tax audit should be there, should get his accounts audited and should obtain the audit report on or before due date of the relevant assessment year. But if he didn't get his books of accounts audited, then what is the provision in this situation in the act? According to section 271 capital B, if a person who is required to comply with section 44 AB, comply with section 44 AB means he have to conduct the tax audit for his books of accounts. If he fails to get his accounts audited by required under section 44 AB and without tax audit, he furnished the audit report, then the assessing officer may impose a penalty. So, if the SSC violated the section 44 AB, then as per section 271B, the assessing officer may impose a penalty on the taxpayer or on the assessor. What type of penalty? Two categories are here: 0.5% of the total sales, total turnover, or gross receipts, or rupees 1,50,000. So penalty is, the penalty shall be lower of the following amounts. Lower of the following two amounts. First is 0.5% of the total sales, turnover or gross receipt, or rupees 1,50,000. In these two figures, which will be lower, that will be the penalty imposed by the assessing officer on the taxpayer or SSC. For which type of SSC? Who is required to get his books of account audited, but he did not do so. He didn't get his books of accounts audited. But, however, under section 271 capital B, no penalty will be levied if there is a reasonable reason or reasonable cause for failure of doing a tax audit. Means the taxpayer or SSC didn't get their books of accounts audited due to sufficient reasons, due to reasonable cause. The reasonable causes that are accepted by the tribunals or courts regarding section 72(1)(b) is, these are: first, natural calamities. If some natural calamities is there due to the SSC didn't get audited his books of accounts, then penalty under section 271B for non conducting the tax audit may be waived by the tax authority. Second, resignation of tax auditor and consequences delay. This case implies that if tax auditor of a business has been resigned and due to the resignation of tax auditor, delay is there. Otherwise, the audit has been completed in time and report will also be submitted in time. Third point, labor problems like a strike, lockouts, or for an extended duration or period. This point imparts that if in a business strike are going on, situation of lockouts are occurs for an extended period, then relief for tax audit under section 271 may attract no penalties. Next point is loss of accounts caused by situations beyond the control of the SSC. In this case, we can say that accounts has been lost, or there are incomplete accounts. Situation is occurred with the SSC that loss of accounts has been incurred, but the reason behind this is beyond the control of the SSC. Suppose accounts has been theft by thieves. So in this case, under section 271B, assessing officer may relax with the penalty, means there may be no penalty. And the last point is physical inability or death of the partner in charge of accounts. Suppose in a business, Mr. A and Mr. B are doing business, and Mr. A is whole sole in charge or responsible person for the books of accounts, but unfortunately Mr. A has been died. Then under section 271B, assessing officer may waive or say that no penalty for non conducting the tax audit by the SSC. But all these excuses or all these reasonable causes should be there, means one or two or one or all, at least one reasonable cause is there. Then assessing officer may waive the penalty or said that there is no penalty for non-conducting of tax audit. Tax audit is compulsory according to the section 44AB Income Tax Act 1961, and for non-conducting the tax audit, Income Tax Act 1961 section 271 capital B empowered the assessing officer to impose a penalty on the taxpayer or assessor, which may be lower of the two amounts. Which amount? First is 5% of the total sales, turnover or gross receipt, and the second amount is 1,50,000. So whatever lower in both amounts, the figure will be imposed by the assessing officer as penalty. So let's sum up the tax audit. In case of meaning, we have discussed that audit conducted by the SSC under section 44AB is called as tax audit. Income Tax 1961 section 44AB have a power that SSC should get audited his books of accounts as necessary tax audit. What is the objective for tax audit? Objective of tax audit is verification of compliance, that whether the SSC followed the or adherence with the tax laws, rules and regulations of Income Tax Act 1961. The objective may be their financial statements accuracy. Tax audit also have a quality to do the accuracy in the financial statements. During the tax audit, if any mistake deviation is there, then it may be improved because it is now in the knowledge of auditor and management. The objective may be as tax administration. With the help of tax audit, information regarding the deductions, rebates, income, expenses are very much clear. And with the help of clarity in data, the tax administration may be very much effective by the tax authorities. Risk mitigation for taxpayers. After the audited books of accounts, they may be available as accurate and reliable data. So, risk degree may be lower or less. And after all these objectives, another objective is to file ITR in an easy way. After the tax audit, when the SSC is very much familiar about the income, deductions, expenses, rebates, reliefs, provisions of income tax act, then to file ITR income tax return may be easy for the SSC. We have already discussed various types of SSC for which tax audit is necessary or not. In first category, we have discussed about the business and presumptive income. In second category, we again discussed about the business. In third category, we again discussed about the business. And in fourth category, again discussion about the category of taxpayer for a business. In all these cases, there compulsory tax audit, but with some conditions. After that, we analyze the profession in fifth category, profession again in sixth category, and in seventh and eighth category, business with loss. And for all these category of taxpayer, we relate the necessity of tax audit. After that, field audit means income tax officer will come to the taxpayer's office or premises for audit purpose. In the second, office audit, in this case, the taxpayer or SSC carry the important documents and reach at income tax office department where the audit will be performed. In the correspondence audit, this is the third type. In correspondence audit, the income tax officer served a letter towards the taxpayer that these documents you have to present for audit purpose. Then, taxpayer send the required documents by the help of email or letter. When we relate the tax audit with statutory audit, then we find that if any type of audit has been conducted in the business or profession that is required or compulsory under any other law, then taxpayer can furnish a prescribed audit report under income tax law stating that since the account have been audited already in accordance with the requirements of another law, so an audit under the Income Tax Act is not necessary. After that, we discuss about the forms for furnishing tax audit report, that is form 3A, 3CB and 3CE. 3CD, form 3CD is as like as the part of audit report. After that, we discuss about the due dates for filing income tax return by various types of category. These all the category of taxpayer and their filing date, means due date are as per financial year 2023-24 or as per assessment year 2024-25. Individual, business requiring transfer pricing, revised return, validated return, updated return, all these are the category. And the last is penalty for non-conducting tax audit. The SSC attracts the penalty if he didn't the tax audit, if it is required by the section 44 AB of Income Tax Act 1961. Assessing officer has a power to impose the penalty on the taxpayer for non-conducting necessary tax audit. What is the penalty? Penalty may be the lower or lesser amount of the two. First is 5% of the total sales, turnover or gross received, and another amount is rupees 1,50,000. Whichever is lower shall be imposed by the income tax officer for non-conducting the tax audit. But if SSC provides that reasonable causes are there for non-conducting of necessary tax audit, then income tax officer may waive the penalty or no penalty is there. These reasonable causes includes natural calamities, resignation of tax auditor and consequence delay, labor problems, loss of accounts, or physical inability or death of the partner in charge of the accounts. So thank you very much.